Massachusetts has reported an unexpected $2 billion increase in tax revenue for the fiscal year, largely attributed to the newly implemented 4% surtax on high earners, commonly referred to as the Millionaires tax. This surtax applies to income exceeding an inflation-adjusted threshold, which stands at $1,083,150 for 2025. The Massachusetts Department of Revenue announced that the state collected nearly $2.987 billion from the surtax, surpassing the initial estimate of $1.3 billion. Additionally, the state garnered $2.439 billion from capital gains taxes. Under existing state legislation, these funds are earmarked for education and transportation improvements. The overall tax revenue for Massachusetts rose by 7.1% to a total of $43.7 billion, even excluding the surtax and capital gains revenue, indicating a robust fiscal performance. Despite concerns that the surtax might drive wealthy individuals out of the state, the number of millionaires in Massachusetts has reportedly increased. This suggests that wealth concentration at the top continues to grow, contrary to critics' warnings. Kristen Kroll, executive director of Fair Share America and a key figure in the surtax campaign, argues that this model demonstrates the feasibility of similar tax policies nationwide. However, Massachusetts still faces financial pressures due to anticipated federal cuts from recent tax laws, prompting Governor Maura Healey to make preemptive budgetary adjustments, including a $130 million cut in the 2026 budget and a hiring freeze. The state's improved fiscal position, compared to last year's $233 million deficit, underscores the potential of targeted tax policies in addressing budgetary challenges.
PepsiCo has been highlighted as a recession-proof investment opportunity by the Motley Fool, ranking 7th on their list of major consumer staple stocks. Despite recent underperformance in its stock price, which has seen a decline of over 20% from its 2023 highs, PepsiCo remains a formidable player in the consumer staples sector. This sector is known for its resilience during economic downturns, as it comprises essential products that consumers continue to purchase regardless of economic conditions. PepsiCo's diversified portfolio, including prominent brands like Pepsi, Frito-Lay, and Quaker Oats, positions it as a robust entity capable of weathering economic challenges. The company's current challenges have resulted in a historically high dividend yield of 3.8%, making it an attractive option for income-focused investors. As a dividend king, with over 50 years of consecutive annual dividend increases, PepsiCo offers a reliable income stream that could appeal to investors seeking stability during potential market volatility. Additionally, its strategic acquisitions of a Mexican-American food maker and a prebiotic beverage company indicate a commitment to aligning with evolving consumer preferences, suggesting a potential for long-term growth despite short-term setbacks. These factors collectively underscore PepsiCo's potential as a solid investment, particularly for those concerned about impending economic recessions.
The U.S. offshore wind industry is experiencing significant disruptions following the suspension of the Revolution Wind project off the coast of Rhode Island. Developed by Danish firm Ørsted, this major initiative was nearing completion when the U.S. Department of the Interior halted it due to unspecified security concerns. This move mirrors the earlier stoppage of the Empire Wind project in New York and raises questions about the federal government's commitment to renewable energy, especially under the Trump administration, which has shown a preference for fossil fuel infrastructure. Revolution Wind, valued at $4 billion, had secured 20-year agreements to supply 704 megawatts of electricity to Rhode Island and Connecticut, enough to power over 350,000 homes. The suspension has caused disruptions in the offshore wind sector, threatening alliances among commercial fishers, environmentalists, and investors. It also raises concerns about increasing utility rates and undermines state-level climate goals, particularly as states along the eastern seaboard rely on offshore wind to meet their targets. The halt coincides with a resurgence of natural gas pipeline proposals, such as Project Maple by Enbridge, suggesting a potential pivot back to fossil fuels, influenced by geopolitical and economic interests. This shift could significantly affect market dynamics, regulatory frameworks, and the future trajectory of the U.S. energy landscape. Connecticut Attorney General William Tong and Rhode Island Attorney General Peter F. Narina have criticized the suspension, with Tong joining a coalition of attorneys general in a lawsuit against the federal government, arguing that it undermines significant investments. Overall, these developments highlight the complex interplay between energy policy, international relations, and domestic economic interests, emphasizing the volatile nature of the U.S. renewable energy sector under current federal policies and the need for the industry to better communicate its benefits in the face of politically driven narratives.
Dangote Refinery has reached a significant production milestone, achieving a capacity of 610,000 barrels per day, BPD, as of August 2025, a notable increase from the 440,000 to 450,000 barrels of oil per day range in previous months. This development positions the refinery, owned by Aliko Dangote, as a transformative force in Africa's oil market, nearing its full design capacity of 650,000 barrels of oil per day, with plans to expand to 700,000 barrels of oil per day. The refinery's increased output has disrupted Nigeria's downstream oil sector, establishing Dangote as the price setter for petrol and reducing the country's reliance on European gasoline imports. The impact of Dangote Refinery's expansion extends beyond Nigeria, affecting West Africa's fuel trade by reducing European imports and potentially positioning Nigeria as a net exporter of gasoline. The facility's success has been bolstered by strategic investments in infrastructure, including the acquisition of thousands of CNG-powered trucks to enhance local distribution networks. However, analysts caution that any major maintenance shutdowns could significantly alter West African trading patterns due to the refinery's substantial throughput. While state-owned refineries in Nigeria struggle, Dangote's facility remains the cornerstone of the country's refining capacity, reshaping regional trade dynamics and contributing to Nigeria's journey toward fuel self-sufficiency.
In 2025, the meme coin market has surged to a valuation of $73 billion, with a daily trading volume of approximately $8 billion, driven by cryptocurrencies like Dogecoin and Shiba Inu, alongside a plethora of new tokens. Platforms such as MEXC and Pump.Fund have capitalized on this trend, offering rapid listings of new meme coins to capture market interest. MEXC has become a popular choice for traders seeking early access to emerging tokens, while Pump.Fund, a Solana-based platform, has facilitated the creation of over 6 million tokens, highlighting the raw potential of meme culture in the crypto space. However, the rapid pace and speculative nature of these platforms also pose significant risks, as many tokens remain untested and susceptible to volatility. In contrast, EDX markets, backed by established financial entities like Citadel Securities and Fidelity Digital Assets, provides a more regulated and institutional-grade alternative for meme coin trading. It currently offers Dogecoin and Shiba Inu, appealing to traditional finance players seeking exposure to meme coins without the associated risks of unverified platforms. Additionally, Solana has emerged as a significant hub for meme coin trading due to its speed and low transaction fees, exemplified by the massive trading volumes witnessed during the launch of a Trump-themed token on Radium. The phenomenon known as the Binance effect continues to influence meme coin prices, with new listings on Binance often experiencing significant price surges. However, much of the excitement is typically priced in by the time of the official announcement, prompting traders to seek early signals. The meme coin market remains closely tied to cultural and societal events, with tokens often experiencing spikes in activity around such occurrences. Despite controversies, including connections to past rug pull schemes, the meme coin market thrives on its community-driven energy and viral nature, with emerging trends like utility-driven meme coins further reshaping its landscape.
Microsoft, Nasdaq, MSFT, and Alphabet, Nasdaq, Google, are capitalizing on the surging demand for artificial intelligence, translating this interest into robust double-digit growth across their diverse business platforms. Both tech giants have leveraged their extensive scale, broad product offerings, and significant cash reserves to maintain a leadership position in AI, underscoring their attractiveness as long-term investments. Microsoft's latest quarterly results highlighted an 18% increase in revenue to $76.4 billion, with its cloud segment, Azure, experiencing a 39% growth due to expanding AI workloads, despite a slight contraction in cloud margins due to increased AI infrastructure spending. The company anticipates efficiency gains that could bolster future profitability. Similarly, Alphabet reported a 14% rise in revenue to $96.4 billion, driven by growth in its core services like search and YouTube, alongside a 32% increase in Google Cloud revenue. The company is investing heavily in AI infrastructure, with a projected capital expenditure of $85 billion in 2025, aiming to sustain and enhance its AI-driven services. Despite the premium valuations of both companies, Microsoft at 37 times earnings and Alphabet at 21 times earnings, their established platforms and diversified revenue streams offer a more stable investment compared to smaller, riskier AI startups. This strategic positioning allows them to effectively monetize AI advancements across various business segments, making them compelling choices for investors seeking exposure to AI with reduced risk.
The anticipation surrounding the approval of a spot Solana, SOL exchange-traded fund, ETF in the United States is intensifying, with significant interest from Wall Street. Following the precedent of Bitcoin and Ethereum ETFs, Solana is positioned as the next candidate for institutional adoption, potentially transforming the cryptocurrency landscape. Major financial firms like VanEck, Fidelity, Franklin Templeton, Bitwise, and Grayscale have filed updated S-1 registration statements with the U.S. Securities and Exchange Commission, SEC, signaling strong belief in Solana's potential. Analysts, including Bloomberg's Eric Balchunas and James Seyffart, have increased the odds of approval to 95%, interpreting current regulatory delays as procedural rather than indicative of rejection. The potential approval of a Solana ETF could lead to an influx of $3 to $6 billion in institutional capital within the first year, according to J.P. Morgan, enhancing liquidity and stabilizing Solana's market. This development is part of a broader trend of growing acceptance and mainstream adoption of cryptocurrencies, supported by a gradually more crypto-friendly regulatory environment in Washington. While Solana captures significant attention, emerging projects like MagaCoin Finance are also drawing investor interest, reminiscent of early-stage opportunities that have historically offered substantial returns. As the market awaits the SEC's decision, the momentum suggests that the approval of a Solana ETF is more a question of timing than feasibility, promising to reshape the crypto investment landscape.
The recent massive transfer of $300 million USDT from HTX, formerly Huobi, to Aave, a decentralized finance DeFi protocol, has captured the attention of the cryptocurrency community. This transaction, identified as whale activity due to its size, underscores the dynamic interaction between centralized exchanges, CEX, and DeFi platforms. Tether, USDT, a stablecoin pegged to the US dollar, was moved from HTX, a major CEX, to Aave, which offers non-custodial lending and borrowing services. Such a large-scale transfer could indicate strategic financial maneuvers or liquidity management, reflecting the evolving strategies of crypto market participants. The implications of this transfer are significant for both HTX and Aave. For HTX, the outflow might be part of routine liquidity management or a client's strategic move to capitalize on DeFi opportunities. For Aave, the influx of USDT can enhance its liquidity pools, potentially increasing borrowing opportunities and affecting interest rates, thereby strengthening its position in the DeFi ecosystem. This transaction highlights the growing bridge between centralized and decentralized finance, with increased liquidity on Aave potentially signaling a bullish sentiment towards DeFi protocols. The security and transparency of such large transactions are maintained through blockchain technology, offering insights into the operational integrity of both platforms.
The Rosen law firm has initiated a class action lawsuit on behalf of investors in Alto Neuroscience Inc. concerning shares purchased during the company's initial public offering, IPO, on February 2, 2024, and the subsequent trading period ending October 22, 2024. The lawsuit alleges that Alto Neuroscience made materially false and misleading statements about its business operations and the efficacy of its Alto 100 treatment for major depressive disorder, resulting in investor losses when the truth was revealed. Investors are encouraged to secure legal counsel before the lead plaintiff deadline of September 19, 2025, as they may be entitled to compensation without incurring out-of-pocket expenses. The case underscores the potential financial repercussions for both Alto Neuroscience and its investors, with possible substantial settlements that could affect the company's stock price and reputation. It also highlights the critical importance of due diligence and transparency in corporate communications, as misleading information can lead to significant legal and financial consequences. The Rosen law firm, renowned for its expertise in securities class actions, is advocating for investors to consider their legal options and select experienced counsel to navigate the complexities of this litigation. The outcome of this lawsuit could influence market sentiment towards Alto Neuroscience and other biotech companies, particularly regarding the transparency and reliability of their clinical and commercial projections.
The latest focus in the defense sector highlights Boeing, Citigroup, and GE Aerospace as key stocks to monitor. Driven by their significant trading volumes, these companies are integral players in the defense industry, which benefits from long-term government contracts, providing revenue stability despite fluctuating economic conditions. Boeing is renowned for its comprehensive portfolio, including military aircraft and missile defense systems. Citigroup, while primarily a financial services entity, plays a crucial role in defense financing and logistics through its treasury and trade solutions. GE Aerospace specializes in aerospace products, with a focus on commercial and military engines. The defense sector's stock performance is closely tied to national defense budgets and geopolitical developments, making these companies' movements particularly relevant amid global tensions or shifts in military spending. MarketBeat's identification of these stocks suggests potential opportunities for investors seeking stability and growth in the defense industry. As geopolitical uncertainties continue, these stocks may offer a hedge against broader market volatility, given their reliance on government contracts and strategic defense initiatives.